Hello and welcome. Today we're going to talk about the Rev.Proc 2024-28 rules and how Cryptoworth is playing a role in supporting companies meeting these new rule guidelines. So what is Rev.Proc 2024? These new Rev.Proc rules are requiring all United States-based companies that report cryptocurrency in their books or balance sheet to switch to an account-based or connection-based cost basis methodology in their reporting. So what this means is that any company that's been reporting in universal methodology for cost basis will now need to switch to account or connection based. Why is this important now? Because these rules are coming into effect as of January 1st, 2025 going forward. So there's very little time between now and that start date for these rules for companies to report in a compliant way according to these new IRS guidelines. So let's say you're a company that is reporting in universal based cost basis methodology. You have to ask the question, how do you transition? Well, there's two options. One option is to continue from the same workspace or ledger. It could be a ledger that you're working on and you want to continue the cost basis methodology but in connection or account based as opposed to universal. The second option is to start with a clean slate in a new workspace if you're using an accounting software or a new ledger entirely to start with carryover balances, carryover cost basis if you're starting from a new ledger. If you're using an accounting software or subledger, then running the cost basis calculation by connection or account from the beginning of time up until that date going forward. So let's explore the two options together. So let's say you choose option one. You want to remain in the same workspace. This would apply if you're already using a crypto accounting software. So what you would do in this case is you would run a connection level calculation or account-based calculation. The terminology can vary depending on the accounting software that you're using. You run the connection level calculation and export the transactions with their new designated cost basis for all your transaction lines. Why is this important? Well, this export of data is what you're going to use to check as a cross-point reference your cost basis going forward from January 1st, 2025 in your ledger. The second step is to rerun the calculation at a universal level for the last year that you're reporting in that methodology, which is the last year that's allowed is 2024. So assuming you're reporting your year end in that methodology, you would rerun it, the universal based calculation methodology, and then lock your transactions. So many accounting softwares have the ability to lock your transactions, typically a function that you would do after closing your books. Now that you have that export, what you can do is calculate your token balances per connection. So at a connection level or account level, and input your starting balances as of the beginning of January 1st, 2025, and you can manually adjust your cost basis at the connection level based on that initial export from step one. So what this does is it gives you on January 1st in your ledger or accounting software, your connection-based inventory and connection-based cost basis. So what you would do from this point forward is to run your cost basis calculation from January 1st, 2025 as your start date. So you always want to use that filter start date. If you do not use a start date in this option, it's going to unintentionally transfer cost basis from the previously closed period. So essentially what you're doing is you're cutting up into your ledger into a completely new accounting methodology from January 1st, 2025 onward. So this is the option you would take if you want to keep everything within the same ledger, within the same workspace, if you're using an accounting software. Option two, it's an interesting option because it also works. We've seen some companies taking this approach. It's good for CPAs, accountants who want to start off on a completely clean slate So in this option, what you would do is you would take, very similarly to the first option, you would run your connection level calculation and export the cost basis of your data. So just like in the first option, and then in step 2, you would rerun the calculation at a universal level and lock the transactions. So just like in option 1, same first 2 steps. The difference is with the exported cost basis for all your line items, that will be used as a reference point to make sure that your connection level cost basis in aggregate is matching the connection level cost basis of your older workspace or your original ledger once you move into the new workspace or new ledger. So step 3, and this is most commonly going to be taken in a crypto accounting software like Cryptoworth. You can create a new workspace, entity, portfolio. Those terms will essentially mean the same thing oftentimes in the crypto accounting software. Import your connections from your old workspace into the new workspace. So essentially what's happening is you're connecting all your data, your crypto data, wallets, exchange APIs, etc., into the new workspace, and then you run a new connection level calculation for the entire history. So this is permittable because you're starting fresh from a new workspace, so you're able to run accurately a connection level calculation from the very beginning without changing the ledger. And essentially what you're looking to do is to match the cost basis of your connections and the token inventory per connection with the exported cost basis data that you generated from the first workspace, the original workspace. So if the numbers match, the cost basis match at the connection level between the two different workspaces, the old one and the new one, then you can rest assured that your new workspace is reflecting your financials accurately and you can continue on. In this instance, you wouldn't have to do a start date in your filters. So now we're going to put what we explained into practice within the context of Cryptoworth, a crypto accounting and reporting software for companies worldwide. In the United States, if you're wanting to be compliant with the new Rev.Proc 2024-28 rules, you need to switch your cost basis methodology to connection or account based from universal. So the first thing you want to do on Cryptoworth to meet these new Rev.Proc guidelines is you want to make that change of your cost basis methodology. So let's click on configuration button here. And let's go ahead and change our cost basis from FIFO universal to FIFO connection level. So with Cryptoworth, we make it as easy as a click of a button to switch the accounting methodology. So now that I have selected connection level, I can go ahead and X out of here. Now we're going to explore both options. First option we discussed was to continue on with the same ledger. So the first option, to implement it, you want to do recalculation of all your transactions into the account-based methodology. So here I have everything selected. I'm going to go ahead and click on calculate. So what this is going to do is it's going to run the calculation for my entire period in the new account-based calculation methodology. The second step is to export that data. So once that data is done calculating, you would click on export and go ahead and export everything via CSV. So that way you have your cost basis for all your transactions, which you will need in order to set up your carryover token inventory and cost basis at the connection level for the January 1st start date. So step 3 in this process is to actually recalculate everything in universal mode up until your year end. So in this case, December 31st, 2024. Because this is the last year that companies in the United States can report in the universal cost basis methodology. We're still in December 11th, so it's not going to let me choose December 31st, but in your case, let's say you're past the 2024 year, you're retroactively running your calculation as of December 31st. Recalculate. Now all your transactions will have cost basis calculated via the universal methodology. The next step is to lock your transactions because you're closing that period. So essentially what you want to do is lock all your transactions. So most accounting softwares like QuickBooks Zero, you can lock your transactions. You can also do this in Cryptoworth. So this is part of your closing process of the books. And then the next step is to essentially select your January 1st, 2025 start date. And with that start date, you want to use the connection level cost basis that you calculated initially and input those values as of that start date on January 1st, 2025. So how would you do that? Well, we have the ability to merge the data via transaction merge. So we have a CSV import that you can do to import your starting balances and cost basis at the connection level. If you're going to choose this option, what needs to be done is every single time that you're running a new calculation of your cost basis, because you're using a new methodology from January 1st onward compared to what you were using in the past, you want to always make sure that your calculation is starting from that new ledger start date. Essentially, it's the new ledger start date that you're implementing in Cryptoworth. Let's explore the next option. So the next option is to start on a clean slate on a new workspace. A lot of accountants find this option attractive just because you're essentially starting from scratch. And when you're doing this, calculating cost basis at the account level, there's not really much to worry or think about because you can calculate for the entire data set. So the first thing you're going to want to do is obviously create the new workspace. So you would go ahead and create the new entity or workspace. Name it, let's say, Workspace New. And then select your currency, time zone, and calculation methodology. Of course, you want to keep the same methodology that you were using unless you're expecting to change it for tax advantageous reasons. So let's say FIFO. You would choose connection level FIFO later on once you have that workspace set up. Let's go back to the workspace to simulate that change. So let's say you're going to export your connections from your old workspace to the new one. Well, in your connections page, you actually have the ability to export all your accounts. So essentially what you can do is export your entire wallet list from your old workspace and then bulk import them, a button right above, into the new workspace. So that way you can easily bring in your crypto data from one place to the other seamlessly. And once you do that, we're going to actually do the two same steps as we did in option one. So essentially run the cost basis calculation at the connection level. So make sure you're running the cost basis at the connection level in the old portfolio. Export the data. So now this data that you're exporting is going to be your cross-reference point to make sure that your cost basis at the connection level in the new workspace is matching what you exported from the old workspace. So if you run your cost basis calculation, the data that you're going to want to cross-check would be your unrealized gain loss report. So in the unrealized gain loss report, it's going to show you at the connection level your cost basis for each token in inventory per connection. Okay, perfect. So in your unrealized gain loss report, you would go to connections. You will notice that your connections have their unrealized gain loss. You can expand them to see your remaining inventory. So essentially what you want to have here is midnight December 31st, 2024, or the first minute of the day, January 1st, 2025. You want to have your historical inventory and the cost basis for that inventory. So you have your cost basis at the connection level per asset. So in the original export that you exported from your old workspace, your connection level cost basis could be cross-referenced with your new workspace connection level cost basis figures. So if everything is matching at the connection level, or at a bare minimum, if they match at the consolidated level, then the totalities of the two figures between the two different workspaces are reconciling, which is a great sign. And then of course the next step is to make sure they reconcile at the connection level. So assuming they do, you can go ahead and start your new books for 2025 in the new workspace. And you won't have to do any start date. So that's the main difference. If you set up a new workspace, you won't have to ever do a start date because you're not doing any carryover token inventory or cost basis. You can calculate from the beginning of time in your data set. I hope you found that helpful, and follow Cryptoworth to learn more.